Hi everyone, in this video I want to walk you through the steps that you would use to calculate the efficiency ratios for a company. We're going to be using Amazon as our example company, and we will also calculate the cash conversion cycle. So as stated in the lecture, you're going to need 2 years worth of data from the income statement, and as you can see here, typically, a company will provide you with 3 years worth, but we only need 2020 and 2019. And then I'm going to move over to the balance sheet. And as you can see here, we're going to need the inventory, accounts receivable, and accounts payable. And in order to conduct our efficiency ratios, the first thing that we're going to have to do is calculate our averages for 2020 and 2019. So I'm going to calculate inventories first, and I'm going to click inside that cell to calculate the average of 2020 and 2019. I can add 2020 plus 2019, divide that by 2. However, I'm also going to show you that you can use a function by beginning with an equal sign, type in average, and then an open parenthesis, grab the 2 numbers, close the parenthesis, and then enter. And I'm going to do that for 2019 and 2018 to get the average for 2019. And you're just going to do this for those 3 accounts that you'll be working with for conducting the efficiency ratios. So here I'm taking 2019 and 2018, taking the average. And then I get down to accounts payable, and I'm going to type in the average function. I'm going to grab the 2 years of the average for 2020. And then I'm going to come into this cell, and I'm going to grab the average for 2019, which will consist of 2019 and 2018. So now I have my averages. So now I'm going to move over to my efficiency ratios, and this is a spreadsheet that I've set up that you are free to mimic, for your assignment if you want to. So to look at the efficiency ratios, I'm sorry, here, let me just unhide this stuff here. So I'm going to start with my inventory ratios. And as you can see, this information has been filled in. So I'm clicking into the cost of goods sold to begin my inventory turnover. And if you look up here at the formula bar, notice that I'm not free typing in the numbers. Rather, what I'm doing, I will delete that to show you what I'm doing. I'm clicking inside that cell, and I'm clicking on the equal sign. And I know cost of goods sold comes from the income statement, or in Amazon's case, they call it the statement of operations. And I'm going to grab the cost of goods sold and click enter, and that number automatically populates. So again, what this does, by clicking on the equal sign and referencing the cells that you want to use, it minimizes the errors that could occur from free form typing. And then the average inventory, again, I'm going to click the equal sign. I'm going to come over to the balance sheet because that's where the inventory is. And that's what we just calculated here for 2020. I'm going to click that cell, and you can tell that it's selected because it has a moving box around it, and I hit enter, and that number is automatically populated. And I'm going to do the same for the 2019 average. I click on the balance sheet tab, grab the 2019 inventory, and hit enter. And then these cells down here, again, if you look at the formula bar, you can see that those have been divided by one another. So now when I'm looking at the days, 365 is what I'm going to start with, right, for every single efficiency ratio. And I've set it up so that this will automatically grab the result of this cell, right? So if I delete that, what I want to do is equals the 1053, and same with 2019 equals the 879. Calculation is done. And then you can see over here, I'm starting my cash conversion cycle. So again, I do this so I can minimize the amount of typing errors from free-form typing. So then we get down to the receivables turnover, and I'm going to click in the 2020 current year cell, and I want to grab the revenue, which comes from the income statement. So I'm going to start my formula with equals. I'm going to come over to the consolidated statement of operations. So the revenue is labeled as total net sales on the Amazon income statement, and I'm going to grab that 2020 number and hit enter. And then I'm going to do the same thing for 2019. Come down here and I select the statement of operations, also the income statement, and grab the 2019 number. Now for my average receivables, I'm going to start my formula with an equal sign. I'm going to go to the balance sheet, and I'm going to grab the averages that we have just performed. So my 2020 average, I equal that. And then for 2019, go back to the balance sheet and I grab that. And then here I didn't do the calculation, so I'll just show you I'm taking the revenue and I'm dividing that by the average receivables. And I'm going to do the same over here. And then if I move over to the days, notice I'm not referencing anything yet, but to reference that, I'm going to equal to start the formula, and I'm going to grab 1702. And if I want the 2019, I'm going to equal and do the 1496. And then I'm going to type in the equal sign and divide the days in the year by days receivable to get the average in days. Okay, so again, we're going to do the same thing for payables turnover. I want cost of goods sold or cost of revenue equal, and that's on the income statement. So here's my cost of goods sold for 2020 and equals cost of goods sold for 2019. And then accounts payable, I'm going to equals, and I'm going to go to the balance sheet, and I'm going to use the averages that we've performed in the previous step. And then I'm going to grab the average for 2019. And then I'm going to divide these numbers. So then if you come over to the days area, I need my payables turnover equals the results of my annual turnover. And same for 2019, I grab the results of the annual. And again, I divide 365 days in a year by each of the results. And that performs these calculations. Now for the cash conversion cycle, so I have DII, days in inventory, that's coming from here, right? So this right here, we're gonna just get rid of. So for my days in inventory, days, I want the results from this area. So for the 2020 current year, I'm going to hit equal, and I'm going to grab the result for days in inventory. And then for 2019, I'm going to, again, start the formula with an equal sign and grab the results from the days in inventory. And then for DSO, day sales outstanding, that's the receivables days, the receivables day sales outstanding. So I'm going to equal, and I'm going to select the result of the days sales outstanding, and I'm going to equal the day sales outstanding for 2018. And then I'm going to come down here into this cell to insert the DPO, the days payable outstanding. So I start the formula with an equal sign, and I grab the results from the days for both years. And then my formula for the cash conversion cycle is DII plus DSO minus DPO. Days in inventory, days sales outstanding minus days payable outstanding. So the formula is equal the 3465 plus the days sales outstanding minus the DPO, days payable outstanding. And I come up with negative 3756. And I'm going to do the same thing for 2019. I'm going to take days in inventory. I'm going to add days sales outstanding, and then I'm going to minus out days payable. And these are my results. So this is the cash conversion cycle. And if you recall, having a negative cash conversion cycle does not necessarily indicate that something is awry. And basically in Amazon's case, what it's saying is that they are they're moving their inventory quickly. They are receiving payments very quickly, but they are taking a long time to pay their vendors. And again, this could be because of terms that have been set up with vendors, so they're able to hold on to that money before they have to pay it out, and they can use that money to fund areas of their operation. So this is a spreadsheet to show you how you can conduct the efficiency ratios and give you an idea of the working capital for Amazon.